Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of RITES Limited, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited. Thank you, and over to you, Mr. Kapadia.
Thank you, Michelle. Good morning, everyone. On behalf of Elara Securities, we welcome you all for the Q4 FY23 and FY23 conference call of RITES Limited. I take this opportunity to welcome the management of RITES Limited, represented by Shri Rahul Mittal, Chairman and Managing Director, Shri B.P. Nayak, Director Finance, Shri A.K. Singh, Director Projects, and Shri Deepak Tripathi, Director Technicals. We will begin the call with a brief overview by the management, followed by Q&A session. I'll now hand over the call to Rahul sir for his opening remarks. Over to you, sir.
Morning, everybody. Let me begin with a safe harbor statement. The presentation which we uploaded on our website yesterday and all discussions during the call today may have some forward-looking statements. These statements consider the environment we see as of today and obviously carry a risk in terms of uncertainty, because of which the actual results could be different, and we do not undertake to update those statements periodically. So let me at the outset also introduce the latest addition to our board, Dr. Deepak Tripathi, our Director Technical. He is from the 1990 batch of Indian Railway Service of Mechanical Engineers. He had a wide experience across various portfolios in the railways, in Concall Railway, and then he's a graduate in mechanical engineering with doctorate and post-graduation from RITES, specializing in operations, quality, and lead management. So we have a full functional board of our directors of the functional board here. Let me at the outset break down the numbers in brief before I take the questions. As you see, the revenue quarter on quarter, if you compare, has been down by about 11%. If you see FY to FY, it's been flat. Primarily, the export of rolling stock has been the reason for this. There is about a 70 to 80% drop in the contribution of this stream of revenue. And this being a high top line, high bottom line contributor, the key point is that in spite of this drop, let's see where the profits and the margins have gone. So my consultancy stream of revenue has seen an all-time high, highest ever consultancy revenue of about 1189 crores, which is about an 18% jump year on year. And further to this, the international consultancy, which I have been saying in the previous interactions under the RITES Videsh initiative, saw 50% jump year on year, which is a high margin contributor. So because of this, in spite of about 70 to 80% drop in the contribution from the export of rolling stock stream of revenue, the profits have gone up, the margin, the EBITDA has gone up by about 6 to 7%, and the margins also have gone up on an average by about 1%. So the core EBITDA margins are gone up by about 1%. They are safe in the range of about 27%. The PAT margins have also gone up by about more than 1%, so we are about 21%. So moving forward, this is the building up on this core consultancy stream of revenue and getting more export of rolling stock orders in the coming FY. So those are the opening backdrop, and I'm open to questions now.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, Please limit your questions to one per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The first question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, congratulations for strong operating performance. Sir, first question from my side is primarily what is the revenue growth that we are targeting for this year? And also in terms of exports, when can we see traction in the export orders?
So the first part of your question, morning, is regarding the growth. You see, we are, as we have been reiterating, we are a bottom line growth driven company. We will definitely target growth over the previous year's performance. You have seen a growth of about 6 to 7% in our bottom line, and that has been in spite of such a muted contribution from export of rolling stock. So with this trend of growth in the consultancy stream, which is a good margin area, we will build up in this growth in the profit line, bottom line, and by latter part of the year, this contribution from export of rolling stock should also add to this. So it will only, we are aiming to better this growth of 6 to 7% in the bottom line. As far as finite orders from export of rolling stock is concerned, we are in very close now to in a number of prospective clients. You see, there is a lot of pent-up demand in a number of prospective clients across Africa and Southeast Asia for export of rolling stocks. However, post-COVID, they are taking some time to get their funding mechanisms in place because the economy is also recovering. But the stage at which we are in now, we are very confident that very soon, aiming to at least maybe in this quarter itself, try and get some finite orders so that by latter part of this FY, the revenue from these orders start contributing.
Got it. Sir, and if you could quantify the order size or indicative order size for export?
Mr. Mehta, I would request you to maybe rejoin the queue.
Sure, I have a couple more of questions. Thank you.
Thanks.
I'll join in that.
The next question is from the line of Yash Gupta from ThinkSight Advisory. Please go ahead.
Yeah, good morning, everyone. So this quarter we have seen a margin dip across all our verticals, whether it's consultancy, export, or leasing in. So how you are looking at this, and what are the trajectory what we can expect going forward?
So I think, no, Yash, let me correct you. There has been an improvement in margins in all my streams of revenue. In fact, if you see the consultancy itself, year on year also, and that is a key point, my consultancy, there is an improvement of about 3% in the margin. There is an improvement in the turnkey, which is in any case a low margin area. That also has improved about 3% to 4%. My QA, which is also an important area, has also improved in margin. So except the contribution from export of rolling stock, there has been an improvement in margin from my all other streams of revenue. And that's the very reason why you see a growth in the improvement in the margins by about 1.5%. Whether it's the EBITDA margin, which is in the range of about 27% now, or the PAT margins, which are in the range of about 21% now.
Okay, thank you.
Thank you. The next question is from the line of Rohit Natarajan from Antique Stock Broking. Please go ahead.
Yeah, thank you. Thank you for this opportunity. Sir, my question is on to continue on the earlier point that you made on the export orders. Can you give us a timeline, as in before what time will you be looking at these export order inflows to flow in? And B, part of the question will be, will it not have the spillover effect in FY25 too?
Yes, for sure. You see, first part regarding the timeline, we are aiming to get it as early as possible. Our expectation is maybe very soon, maybe in this quarter itself. I mean, till we have a finite order in hand, it will not be correct for me to speculate. However, as I very clearly reiterated, that we are in very advanced negotiations with a number of prospective clients, and I'm sure that we should be able to convert it into a finite order very soon. And export of rolling stock, by its very nature, are long lead orders. They take some time for manufacture and then shipment, and the revenue starts maturing only when the shipment happens. So the aim is to get some orders in this first quarter itself, so that by latter part of FY, the revenue starts coming in from these orders, and they will definitely spill over to the next FY. And the aim is that this gap of about 2.5 years, unfortunately because of the COVID period where there were no fresh orders, has resulted in the gap in contribution from this stream of revenue. So moving forward, we are aiming to have a mix of a number of rolling stock export orders, so that there is a steady stream of revenue contribution which continues starting from latter part of this FY.
Thank you, sir. I will join back in the queue.
Thank you. The next question is from the line of Sanjay Doshi from Nippon India Mutual Fund. Please go ahead.
Good morning, management team, and congratulations on a very robust year, despite all the challenges that you keep on highlighting. So my only question is on the overseas consultancy business, which is getting very strong traction now in the last 12 months that we have seen. If you can just help us appreciate what has been RITES doing it right to be able to make good of this opportunity, and if you can help us understand this opportunity from a 3-5 year perspective. Thank you.
Thank you so much. In fact, you asked a question very close to our heart of our entire company. We have made very aggressive forays under the RITES Videsh initiative in the last FY across areas of consultancy, across continents. And as post-COVID the world has opened up, we have been getting orders and leads and revenue realization across sectors. So whether it is a highway project in Guyana, the metro in Mauritius, we are doing a rail infra and a highway project in Bangladesh, ICP project, airport project. So across that, we are that has made it possible to see a 50% growth in the international consultancy revenue. Moving forward, we are confident that this trend will continue. The kind of traction, the kind of mileage, and the kind of leads and we are getting across countries, we are sure that we will be able to capitalize and build up on this trend. And you'll see in this FY and moving forward also, this is going to continue to grow.
Thank you very much and all the best.
Thank you.
Thank you. The next question is from the line of Gautam V, an individual investor. Please go ahead.
Good morning, sir. Congratulations on the good results. Earlier, there was some thought process around expanding the product portfolio for the export business. I believe we were targeting new countries with different gauge of railways. Could you please throw some light on the developments in that space?
Yes, in fact, that is our core focus area. You see, just before COVID, we got this very interesting order of export of rolling stock to Mozambique, locomotives, coaches, and DMUs. And this was a Cape gauge order, which is unique. It is 1067 mm, little more than the meter gauge. And there are about 11 countries in Africa, neighboring countries across Africa, which have this gauge. So with this order, as this order matured and we did this shipment in the last 21-22 and part of it in 22-23, this has got lot of mileage, and that is the reason why a number of countries in Africa have reached out to us to get similar kind of stock in Cape gauge. We are more than equipped for it, and this is what, as I said, we have been targeting very aggressively. These countries are getting their funding mechanisms in place. As I said, post-COVID, they are taking a little time to recover. But as I said, I'm confident that we should be able to translate this into orders very soon.
Understood, sir. Thank you.
Thank you. We have the next question from the line of Ankur Sanwal, an individual investor. Please go ahead.
Sir, my question got answered by Mr. Sanjay Bhai. Thank you, sir.
Thank you. The next question is from the line of Pranay Khandelwal from Alpha Invesco. Please go ahead.
Thanks for the opportunity. I wanted to ask, last quarter you had guided that there will be some non-railway orders in the QA business. So can you just give us a breakup of what it was last year and this year?
See, on an average, we have both kinds of clients, whether this is IR, Indian Railways as a client, and non-Indian Railways as a client across various sectors. So as I said, and as I said in the last interaction, as the Indian Railways stream of revenue has now opened up to 3 other players, our aim is to continue to tap more and more further clients so that the overall stream of revenue from this stream remains intact. And this quarter itself, you would have seen that there is a growth in this stream of revenue. There is a contribution of growth in about 10% growth. So this has been possible because in spite of the competition from Indian Railways as a client, we have been able to tap a number of non-Indian Railway clients also, and this is a trend that is going to continue, so that overall you should be able to see a steady stream of revenue from the QA sector.
Thank you.
Thank you. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks a lot for the opportunity. And one question on the consultancy side. We have an order book which is roughly like 2027 odd billion. What is the export side contribution in this? And if you have the same number for FY22 also?
Yes, morning Vishal. So you correctly said out of the total 5870 order book, the turnkey is about 2850. The consultancy is about 2700. Export is only about 100 crores balance, export of rolling stock. And leasing is 150 crores and balance about 100 is RMCM.
So I was saying, in consultancy, because there is a line item in consultancy, revenue line item of domestic and export. So within this order book of 27 odd billion, what is the export side order book of consultancy?
No, export is a separate, export line item is for export of rolling stock. That is 100 crores. We demarcate the revenue streams and export of rolling stock. Consultancy is 2700, which includes all sectors, whether some of them are the domestic, some are international consultancy, which is the total consultancy pie. Export of rolling stock is over and above 2700, which is pure export of rolling stock, which is 100 crores balance.
Okay. If I may ask one last question. So I think the pie of this export side consultancy has increased in this year to around 13%. So it looks like there is a benefit of operating leverage in this particular line item. Can you guide like in how this number could be in FY24 or 25? Maybe a ballpark will be helpful.
So you see, 1189 crores is the total revenue from my consultancy stream, which is a growth of about 18%. Out of that 1189, there is an international consultancy element also. This is non-export of rolling stock, pure international consultancy, which has seen a growth of about 50%. So that is what I mentioned some time back, that this is an area moving forward. This trend is definitely going to continue because within the consultancy pie itself, between domestic consultancy and international consultancy gives me slightly better margin. So to overall, and that is the reason why in the overall consultancy pie, the margins have gone up by about 3%. That is primarily that in spite of competition in the domestic sector of consultancy, because of my growth in international consultancy, I have been able to have a growth in margins of about 3%.
Sure, sir. Thank you.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. In terms of consultancy, if we see the consolidated numbers, the revenue is slightly higher, I think approx 1,300 crore. And there our margins are almost at 50%. So do you feel that such margins are sustainable? And secondly, on the export of rolling stock business, so I understand that you cannot guide for any exact numbers for the future orders, but let's say in FY23 we did 300 crore top line. A year before that was almost 1,000 crore. So can it be like 400, 500 crore consistently every year? Let's say once the the cycle of starts.
Yes, very correct. In fact, you got the complete right details, and you hit the nail on the head. In fact, consultancy, the total consultancy is 1189 crores, which includes domestic consultancy, international consultancy. It includes the QA, the inspection QA wing also. So this has overall seen a growth of about 18%. Yes, this has seen very good margins, and that has been primarily because, as I said, some growth and a good growth in our international consultancy. There was a good growth in our QA business. So moving forward, while the stress on margins due to conventional areas of domestic consultancy will be there, but and that was there in the last FY also. But in spite of that, the consultancy itself saw a good growth in margins, not only numbers, but also growth in margins. So moving forward, our focus in consultancy would be, as far as domestic sector is concerned, to focus more and more on high margin, skilled areas of consultancy, which is our core niche strength. It's metros, bridges, tunnels, urban engineering, city planning. And in terms of international consultancy, to grow further aggressively, so that overall you see a growth in the margins of consultancy also, or at least be able to sustain margins to the extent possible, if not grow, but at least grow in terms of the top line and bottom line in consultancy. As far as export of rolling stock is concerned, you made a very good assessment of the kind of steady basis revenue on an annual basis which we are aiming at. As you see, 966 was in 21-22 and about 300 in 22-23, which is primarily these two orders of Mozambique and Sri Lanka. So going by the past trend and the past few years that RITES has been exporting rolling stock to countries, and the average size of the orders that we get, plus the lead time that it takes to manufacture and export them, I think a fair enough assessment, or at least a target on a steady basis of about 400 to 500 crores on an annual basis would be a good target to aim at.
Okay, that's it from me. Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone phone. The next question is from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, last year we did a turnkey revenue of around 915 crores. So what kind of revenue growth we are expecting in turnkey this year?
So you see, turnkey has grown quite a lot, as you see from the numbers, and that has primarily happened because of the about 70-80% drop in the revenue contribution from export of rolling stock. So the top line has been, that's why the overall revenue is about flat on a year-on-year basis, and that's basically because of a substantial growth in the contribution from the turnkey segment. However, having said that, as we have been very clearly saying that we are a consultancy company, our key focus continues to be on the high margin consultancy area. Moving forward, as we mature, some export of rolling stock orders mature, the distribution of the turnkey segment to our overall revenue is going to gradually taper off. So main focus will and has been and will remain on consultancy as well as export of rolling stock.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead. Mr. Parekh, I have unmuted your line. Kindly proceed with your question.
Yeah, sorry. Hi, am I audible?
Yes, go ahead, please.
Hi, good morning. I just want to ask on the consultancy side, right, the order book that we have, can you give a split of out of that, how much is nomination versus competition based that we won? Overall, it seems like it's 50-50, but is it different on the consultancy side?
So you see, the trend has been that in the last year, all my clients across sectors, across states, across PSUs, across private entities, across the Indian Railways as a client, has now started moving on a monthly or a quarterly basis from nomination to the competitor basis. And you put it correctly that overall, in fact, it has now moved to about 50% on competitive basis. So it would be very difficult to, because we operate in about 8-9 key sectors, about 10 sectors across various sectors. So every sector has a different percentage of the competitive versus nomination. For example, in the metro sector, I would say it is all 100% on competitive basis. It's zero on nomination. So it is primarily varies from sector to sector. Recently, we have got a number of projects on ropeways in the DPRs for the port connectivities, for the IMS from NHLML. All these are all on competitive bidding basis. So this is again 100 to 0. Yes, there are certain clients like some PSUs or certain states which give some orders maybe in rail connectivity, rail infra on nomination basis. But the extent of variation from sector to sector is very large.
Right, got it. And, just for another 2,700 crore order book that you have, out of that, how much is executable in this year, FY24, and how much beyond? And secondly, I think this was asked earlier, but what is the mix between what percentage is international in this 2,700 crores?
So, for your question, you see, the consultancy, as you would appreciate by its very nature, has orders varying from timelines of about 3 to 6 months to orders varying from about 3 to 4 years. So that's a wide mix depending on the nature of the order. You could be doing a PFR or a DPR which you have to do in 3 to 6 months. You could be doing PMC or general consultancy of a CapEx infra project which will last in construction for about 3 years. So the range varies very large. So 2 points. One, that 1189 was the consultancy revenue, an 18% growth year on year. So this year also, this is the trend that we are aiming at from a mix of the short lead, medium lead and long lead orders. And in terms of international consultancy, the revenue growth which you saw in 50% growth year on year, that trend would definitely aim to be continued in this FY from this 2,700 crores pie.
Got it. So broadly looking at 18% overall growth and within that 50% for international, right?
Yes.
Okay. And last question on the margin side.
I'm sorry to interrupt, sir. Sir, I would request you to kindly rejoin the queue.
Okay, sure. Thank you.
Thank you, sir. The next question is from the line of Rohit Mitrajan from Antique Stock Broking. Please go ahead.
Thank you for this opportunity again. Sir, if you could guide us, what is the initial feel about export EBIT margins that you are currently negotiating with? I'm given to understand, in the last calls, you have indicated somewhere like 15 to 20%, but historically we have clocked even much higher number. Is there any translation gains you expect or something of that sort?
So if you're talking about export of rolling stock,
exactly,
traditionally,
export of rolling stock and EBIT margins about that.
Yes, so export of rolling stock margins have been traditionally over the last 4-5 years that if you see our stream-wise margins analysis, export of rolling stock has been in the range of about 20-odd%. Now, these would vary from order to order and not be possible for me to reveal the negotiations of the margins on each individual order. They would vary from order to order, but yes, that has been the trend of margins and that is what would be the aim. However, as I mentioned, with every passing year, this sector is also becoming more and more competitive, and post-COVID, all the prospective client countries in Africa and Southeast Asia, they are also a little cash-strapped, so they are also looking at trying to optimize the order values because of their funding issues. So obviously, these margins will also be difficult to sustain. But yes, they have been traditionally in the range of about 20-odd%.
Thank you, sir. That's it from my side. Wish you all the best.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants, anyone who wishes to ask a question may press star and 1 now. We have the next question from the line of Gautam B, an individual investor. Please go ahead.
Hello, sir. Just wanted to understand a longer-term perspective. So, are there any new business verticals or, new products which are being developed? Earlier, the previous chairman had mentioned also some thought process around getting into road constructions, etc. Maybe that is not, going forward, but if there are any other plans on business expansion, if you could please share some thought process for a 3 to 5 year view, that would be great.
Right. So, coming to the second part of the question first, we are not a construction company and we will not foray into any kind of major diversification or any kind of even aggressive growth in being a construction company. We are a consultancy company, and as you have seen in the results of this year also, that has been the growth area. As I said, about 18% growth in the consultancy revenue, and that is what has made it possible for the margins also to not only remain secure but grow, and also the PAT to grow from about 6 to 7% in spite of muted contribution from export of rolling stock. So having said that, consultancy, both domestic and international across sectors, will remain our focus area. And as far as diversification is concerned, besides, tapping on the new areas of the announced in the budget last year and this year, you see, mission. Now that's another very important area which was announced years back, with large budget allocation for that. We recently got an order from the Rajasthan Jal Jeevan Mission about 148 crores. And we hope to be able to capitalize on this, and we are aiming to try and tap opportunities across states. Another very major area which I have been mentioning in my past few interactions was that last year we formed a new vertical called sustainability, and we were very confident that by latter part of the year we would be able to tap the various opportunities across states and get some orders. And we are very happy that within a short period of less than a year, this newly formed vertical, we have been able to get orders from the Ministry of Housing and Urban Development as a consultant for that solid waste management and used water management. We have been able to get orders in Bangalore for air pollution and solid waste management. So, and there's a lot of potential across states in sustainability. So that's an area which is a new age area. It has a lot of scope that we are going to aggressively further grow in.
Understood, sir. Sir, just one thing. On the cash balances, could you please throw some idea on what the balance looks like and what your plan is for the utilization of cash?
You see, we have got a cash balance of about 800 crores, and we are a low capex company. Our capex has been in the range traditionally of about 100 odd crores. This year also, we are aiming for about 100 odd crores. So moving forward, we don't see any major capex investment, and that's the very reason we like to give back what we earn to our investors. And as you see with the final installment recommended by board for about 6 rupees per share, makes it a total of 20.5 rupees a share, which is about 92.8% of our profit we are giving back to the shareholders as a dividend. So that's going to be the trend that we are aiming for in the coming years also.
How much of this is the working capital requirement?
Our working capital requirements are very minimal, as I said, and we are a debt-free company, very minimal working capital requirement, and a very low capital.
Sure, sir. Thank you.
Thank you. The next question is from the line of Ankur Sanwal, an individual investor. Please go ahead.
Sir, what is the potential of Q&A work in country like India and for company like RITES?
It is a tremendous potential. I'm glad you asked this question. Recently, we have been certified as an ISA company also, which is, we are the only, maybe the second company in India and the only PSU to have an ISA certification that further adds to our bouquet of services. We have been in this business for more than 40-45 years now, and we have been doing QA across sectors, whether it is the rail sector, whether it is the private clients, whether it is structures, civil engineering, electrical engineering. So that's the wide bouquet of services that we offer under our QA vertical. And with this recent additional certification that we've got, I'm sure that this QA business, in spite of increased competition, is only going to grow.
Sir, just one suggestion. Apart from dividend, if we can also think of buyback with such an amount of cash we are generating, and that will be good for company in the long term. Thank you, sir.
Yeah, thank you. Your suggestion is noted. We'll definitely look at it in the coming FY if possible. Thank you.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Yeah. Good morning, sir. Thanks for the opportunity. So I just wanted to know, can you give a breakup of the quality insurance for the entire year? How much was a part of a consultancy and the breakup in the order book also?
You see, as far as order book is concerned, QA is a part of it's a rolling order book. So it will not be, it's a constant order that you keep getting, and we ensure that it's a rolling order book. In terms of contribution to the total consultancy, it was about 390 odd crores, which is all-time high also in terms of contributing to the consultancy stream. And that is why it has gone a big way in contributing both in terms of the top line and bottom line for the consultancy stream of my revenue.
So if it is fair to assume that this almost since the listing, this qualification business has doubled at the time of listing to now?
It's seen a steady growth. I would not say doubled, but yes, it's seen a steady growth.
Okay, and sir, last question is, sir, you formed a company called AlphaStreet Energy Private Limited. Can you tell me what is this company about, sir?
No, it's not formed a company. It's an investment for you're talking about Illustrious, right?
Yes, sir.
Yeah, so it's an investment of ours for a startup with IIT Madras for doing some research work as an incubator. So we encourage R&D work. So this is in for studies in drone technology, in renewables, and in basically research in that area.
Okay, thank you, sir. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Good morning, sir, and congratulations on a good number. So my question is with export of rolling stock coming back and other sectors firing for us, would it be fair to assume we'll have a double-digit top-line growth and the bottom line will be maintained at the same level in years to come?
I am glad you asked this question. You see, I would put it reverse. As you correctly said, with all other sectors firing for us, and all my streams of revenue have seen a growth year on year, and in spite of muted contribution, as I said, from one stream, you saw a 6 to 7% growth in the bottom line. So we will aim to improve this trend of growth in the bottom line more, and let's aspire for a double-digit growth in the bottom line. That would be our aspiration, our vision, and our target.
Oh, okay. So it means our bottom line should improve over days to come. That's what is the aim of the management?
That's what our vision is, our aim is, and our aspiration.
Okay. Thank you, sir. Thank you so much.
Thank you. Before we take the next question, anyone who wishes to ask a question may press star and on their touchtone telephone. We have the next question from the line of Harshit Kapadia from Elara Securities. Please go ahead.
Thanks for the opportunity and congrats for a very core performance on consultancy. Few questions from my side, sir. Just on the REMCL, we are already seeing electrification being now touching 84%. Probably in the next year's time it will touch 100%. So where are we in terms of REMCL getting more business from the Indian Railways? So out of 3 gigawatt which was estimated, how much of electrification we have done from REMCL point of view? And connected to this is the DFC is expected to be operational in next 1.5 years time. So are we also going to get the REMCL as in the electrification for DFC as well? Any color on this would be helpful.
So RMCL, I must say, has performed tremendously well in this FY, and it has further contributed to the overall performance of RITES as a consolidated performance. You see, RMCL for the first time had major landmarks in this FY. It became a debt-free company. It capitalized in the growth of the electrification in Indian Railways and the growth in traffic post-COVID. It for the first time crossed the 100 crore bar of revenue. It has made a revenue of 117 crore. It has a profit of 59 crores, which is a growth of 31%. It for the first time gave the highest ever dividend to its shareholders, that is Indian Railways and RITES. It has given a total, it has recommended with the final dividend of 3 rupees per share, an initial of 2.5 a share. It would total up to about 58 crores of dividend, which is about 98% of its PAT. It is distributing it as dividend to its shareholders. So RMCL has seen a tremendous performance in this year. It's a PAT margins of 50% plus. And you correctly said with this electrification reaching its complete nearly 100% in this FY, and also DFC coming up, RMCL can only grow, and we are targeting more aggressive growth in this. Further, today it's catering to about 70% of the overall requirement of traction energy for Indian Railways. And there are about 7 states which are still not on the open access. The effort is to be able to get these states on the open access so that we are able to increase even further, besides the growth in electrification and traffic in Indian Railways, more and more open access, which will increase the revenue of RMCL further.
Fair enough, sir. I'll join the question queue.
Thank you.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone phone. We have the next question from the line of Harshit Kapadia from Elara Securities. Please go ahead.
Thank you once again. So just a bookkeeping question. What is the QA revenue for the entire FY23, sir?
The QA revenue has been 393 crores, which is a jump of about 20% from the previous FY.
Okay. And what is the rail and non-rail share within this 393?
It's roughly about 2/3, 1/3. 2/3 rail and 1/3 non-rail.
Okay. And I'll join the question queue, sir. Thank you.
Thank you. The next question is from the line of Gautam V, an individual investor. Please go ahead.
Sir, just wanted to understand the JV of ISRBC. Could you please share an update on that?
So, good afternoon, Gautam. So, in 21-22, latter part of 21-22, a decision was taken to close IRSDC, and post that, the process has started, and it is following the due necessary procedures, and I'm sure that our expectation is that by end of this FY, we are expecting that all necessary formalities would have taken place for its final closure.
Is there any capital which will come back to RITES as a part of the closure?
No, no capital will come back, but we don't foresee any major adverse impact also on its closure.
Understood. Thank you.
Thank you. We have the next question from the line of Harshit Kapadia from Elara Securities. Please go ahead.
Yeah, thanks, sir. So just wanted to get the color on the consultancy within the domestic landscape. If you can highlight some of the projects where, or some of the large projects where you are eyeing consultancy across your infrastructure segment, that would be helpful so that we can track, how things are happening. That's the first part.
So, you see, we have 2-3, our aim, and let me put it this way, our aim in domestic, we have about 10 different areas where we do domestic consultancy across all areas of infrastructure. Now, in this, there are certain areas where over a period of time, because of a large number of even small players coming up, the competition has become, I would use the word, very, very stiff, and margins have become very tight. So maybe sectors like highway consultancy, building consultancy. So while we are still getting a lot of orders in that, however, our focus is also to get more and more orders parallelly in the high margin consultancy areas. And those are where our core strength, where there are good players to compete with. And then if you win a contract in competitive bidding, you get a good top line and bottom line. So whether it is the metros, or whether it is the city planning, or whether it is DPRs for connectivity, DPRs or PMC for connectivity type of work. Now, as I said, we are getting a lot of work in ropeways, which is again a very core strength of ours. We are getting a lot of work in city plans and IMS, this is integrated modal stations. So these are the areas which are our traditionally core strengths, and this is where we will continue to aim at, so that and rail infra connectivity across as more and more coal fields and mines and are growing aggressively, steel plants, more orders in rail connectivity. We have got some recent orders from Jal Jeevan, as I mentioned. We got some orders in Kerala, about 84 crores on the non-transport sector, all infra consultancy there. We have got an order in Northeast from Assam Health Department for doing their project management consultancy for construction of 12 hospitals. So these are areas which are relying on our core strength. And that's the area which we are going to work on. And we've recently got an order from Hyderabad Metro General Consultancy. So this is where we are going to target aggressively, besides taking orders in the conventional areas of consultancy also, including new areas of sustainability, which I mentioned some time back.
Fair enough, sir. Wishing you all the best. I'll join the queue.
Thank you.
Thank you. The next question is from the line of Prasant Gopal from Spark Asia Impact Managers. Please go ahead.
Hi, sir. Could you give some color on the leasing business and the margins there?
Yes. So leasing is a good traditional business of ours, which gives us good margins of about 30% plus. And in leasing, we own about 65 old diesel locomotives of ours, which we operate. We provide wet lease to a number of sidings. We run actually mini railway systems for them, whether it's coal sidings or steel plants or power plants. We also operate and maintain the rolling stock, which is owned by some of the clients, like these coal plants or power plants. We also maintain and run their mini railway system. So that's a good business. It has seen a steady growth. There is a lot of, it's a good margin business. It contributes also to our top line, about 5% of our top line. It gives us good margins of about 30% plus. So we see this as a good steady stream of business. And as these a number of private players are also coming up in mines and in steel plants and power plants, we are getting orders from them also in this sector.
Thank you, sir.
Thank you. The next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Hi, yes, sir. Can you give me some sense of your numbers in the sustainability revenue, sustainability vertical? Like, what would be the numbers you've done, and then some sense would be helpful.
Yes. So as I mentioned, this was a newly formed vertical sometime early last financial year itself, and by latter part of this FY, we started getting some orders. So example, the Mahua order which we've got for being the consultant for solid waste management and used water management, that's about a 12 crore order. We have got an order from Bangalore for solid waste management, that's about 4 crores, 4.5 crore order. So these are varying. These are and that's the size of a normal consultancy order. They are in the range of about 4 to 5 to 10 crores. So moving forward, we see, as I said, in a short time of about 8-10 months of this vertical, we've already started converting them into orders, and then we are tapping a number of states and prospective clients to grow in this. And this is now will start contributing, these two orders which have come recently in the last 2-3 months itself, will now start contributing revenue from this first quarter itself of this FY.
Would it be fair to assume that the margins in this kind of consultancy is higher than the normal other one? If you have some better margins?
That would be too premature right now to give a generalization. This would depend on order to client, and maybe as we get more orders and the revenue starts coming in, it'd be a better assessment. But yes, these are good margin areas because these are core niche strength areas, and very few players have the kind of capability and strength that we have, and that's the very reason we formed this vertical. We were doing consultancy in this for the last 30-40 years. Only thing, this skill was distributed across my other infrastructure vertical. So if we were doing a highway work, we were doing some sustainability part of that. We were doing a building work, there was a green building element to it. We were doing a metro work, there was an EIA, SIA and green building element associated with that. So this, we tap this avenue, we pooled in this resources and this skill of an experience of ours and formed this standalone vertical which could get more finite standalone orders, and that's been the trend in the last 2-3 months to be able to get these orders.
Oh, thank you, sir.
Thank you. You may press star and 1 to ask a question at this time. The next question is from the line of Harshit Kapadia from Elara Securities. Please go ahead.
Yeah, thank you for the opportunity. So just one question on the turnkey construction. We have seen that the segment is now being private players as well. So how has been the bidding? Have you seen more aggression coming in, or what's your understanding on how the competition is faring? Earlier only it was railway companies who were competing.
Yes, very true. As you correctly said, for all railway construction projects also, whether it is station development or new line doubling works, all infra works of rail infra also, it has been opened up to a lot of competition. Yes, it was some time back, it was some particular projects of railways were being limited to bidding between the railway PSUs and some other non-railway PSUs. And in the last FY, it has been all sectors of construction for rail infra also has been opened up to all private players also. So yes, it is definitely more competitive. And we, as I said, as a strategy, we are limiting our exposure to this turnkey business to very limited amount, and we take that strategically based on certain clients and certain sectors, whether it is some rail infra or like a metro depot in Bangalore or the IIT Delhi which we got an order from IIT Delhi. So we pick and choose and stagger them so that we have a limited exposure to this low margin business.
Understood, sir. And wishing you all the best, sir. Thank you.
Thank you. A reminder to all the participants, please limit your questions to one per participant. Thank you. The next question is from the line of Ankur Sanwal, an individual investor. Please go ahead.
Sir, what are the margins we are seeing in Q&A business?
So the overall margins are an part of the consultancy revenue, right? So the consultancy revenue are about 35-36% margin. 30% plus margins are there, which has contribution from domestic, QA, non-QA, international. So we look at margins on the overall consultancy stream, which is in the range of about 30, 35, 36%.
Thank you, sir.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Yes, sir. Thank you once again. So I just wanted to know in your consultancy order book for the entire year, can you give a breakup between domestic and international, sir, if you don't mind?
No, as I said, the consultancy order book is at a total of 2,700 crores. And this is a fluctuating, some of the orders are QA in that, some of them are domestic, some of them are international. The growth in the international revenue is about 50%, and the orders which are part of this will ensure that this trend continues in international consultancy.
Okay. Thank you.
Thank you. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to Mr. Harshit Kapadia for closing comments. Over to you.
Thank you, Michelle. We would like to thank Shri Rahul Mittal, Chairman and Managing Director, Shri E.K. Singh, Director Projects, Shri B.P. Nayak, Director Finance, and Shri Deepak Tripathi, Director Technical, for giving us an opportunity to host this call. We also would like to thank all investors that are joining for this call. Any closing remarks, Rahul, sir, you want to share with investors?
Yes, I would just like to reiterate that the performance in our consultancy wing, whether it is an all-time high revenue of domestic, an all-time high revenue of international consultancy, the orders, receiving consultancy orders of about 200 fresh consultancy orders in this FY, all these underscore the fact and come out very aggressively and make a very strong statement that this is our core business. We are a premier consultancy company. That's our niche area of operations, and we will continue to grow in this and tap all possible domestic and international opportunities, including the niche and growth areas of diversification areas like sustainability, etc., so that we can raise the bar further in every FY. Thank you.
Thank you very much, sir. On behalf of Elara Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.